Hi, good afternoon, Futex traders, and welcome to an afternoon technical stream. Having it a little bit earlier, we always have it earlier when we have non-farm payrolls, and I'm going to go through this very quick. I know we've had a fairly jam-packed streaming session this morning. I hope you all really enjoyed our first stream with Hugh. Feedback will really be appreciated. The Hugh statistical segment that we had at 12 p.m. today, something always to look into, and some people might find that very helpful. And we might look at something in context with that if we have a little bit of time. But I'm actually trying to make this very quick. Try and do this in the 5 to 7 minutes. Now, firstly, where we're trading in the Bund. So we've had, as expected, after a tremendously big move off the SA's ECB, that should have a fairly volatile morning the following morning. Now, just with regards to the charts. Now, something I just want to show you. Simon Calder actually brought this to my attention just before the stream. It's actually a trend line that I've actually had for a while, but I clean forgot about it yesterday because I was using another charting computer whilst trading. But these two key swing lows over here, trend line, and I always connect. Always two previous swing levels to see if the third time when a test. And generally, the third time is normally the strongest. Is normally the time to get involved. And you can see, so a trend or support or resist line doesn't become a support or resistance or a trend line until 2 points have touched. So here 1, 2, and then yesterday, that's where we bounced off yesterday. So this to me is such a critical area, and I've seen many times before when you've had very big moves, you can get, the market's still trading in a nice wide range, anything in excess of 60 ticks, and it could just really stick around this trend line for a couple of days and then decide if it wants to do a continuation or if it wants to slowly probe and test all of this area from the move yesterday. So expect some volatility now to rotate around whatever range today's candle trades. I expect the market next week to more or less trade that range. I think any probe lower, you could get the market keep on chucking down, but it will first need to get past this key trend line, a daily close below that or a weekly close below this trend line. Now, do remember that they do roll, so all these levels are going to change, but I'm using the continuation chart settings here in the Euro Bund, and a lot of people are rolling and trading the March contracts today. So keep an eye, if you are still in this December contract, just keep an eye on this trend line. And if I show you that trend line comes in 155 and 19, and 155 19. If we bring up, so that's the wrong profile. So if I bring up this profile over here. So yesterday it probably would have been slap bang there. So now the trend line has moved one day up to 155.19. With regards to non-farm payrolls, so key risk event, something I've seen many times before. So just remember, we have a fairly fractured area over here. We've got kind of two zones. So we have the VPOC still up here on CQG at around 150. 150. 603 over here, and then towards the downside we have another important little rotation VPOC type area, the 155.50. So between this area, I wouldn't be surprised if we do have a strong non-farm payrolls report and we make new lows and we trade through, and you can even trade through here fairly aggressively. But if the market doesn't see, if it's more liquidation moves as opposed to new commitment of new sellers, and the market snaps back, it could well easily rotate back into the profile and kind of repair this fractured area. So just be alert of that, is that you can still get a very strong non-farm payrolls, and because the market is so out-positioned itself, that it's had such a move, you can really potentially get a new low, and then if the market doesn't really show any strong concrete selling below the lows from yesterday, and it starts snapping back, well then to me it can easily start trading around this area and come and retest this 156.03. Now for me, key levels to the upside in the Bunds 156.30. The reason why I've said the 156.30 to this 158.67, it's a new type of value zone that you can see over here. You can see where we had a little bit more volume activity, the more of a range from yesterday before we snapped down on the E-prints as per CQG. So to me, 156.30, we start holding it back above there. Then the key resistance for me is this 150. 5667 area. It's a value area low from yesterday. It's really you could see a kind of a high volume node before we have all these low volume nodes. So that's rather important. And then this 89 area over here, midpoint of yesterday. You can also see we have these two little single prints over here. So for me, we can still remain fairly bearish if we hold below yesterday's midpoint. But I expect the market potentially, I like to find a stat on this. I need to ask you is the market could potentially hold by the end of the day within the current distribution that we have. We had a wide initial balance as per market profile theory, wide initial balance. Generally the market can trade within that initial balance on the day. So just this area to keep an eye on, and a note on this area to for the market to potentially repair. If we have a very weak non-farm payrolls number, then to me I'm going to keep a look at 156.30 and then still feel that if the market does trade up, I mean it could very well, but I just have this based on past experience that the market could just rotate around this very volatile region over here. So that is the Bund for you. Just very quick. Euro stocks are just going to have a look at the daily chart, because we are approaching the pit open session, so I wanted to finish now before that. We have now really testing, this is still the candlestick of that ECB, 2 ECBs ago. You can see we've just touched that was the morning of the Paris bombings, so this is such a key support area. Previous swing low here, the 32.85. For this market to clear down, I'd actually wanted to rotate, put some time over here, just balance this very move to the downside. If this starts trading low immediately, just be very aware of powerful snapbacks. Whereas if it builds some time over here, then it can really trade low and continue because it captures some more positions. I expect the market to potentially now trade between the 33.78 and the 32.85 on the daily charts. You can see as these previous swing lows, we've hardly done any. If you had to bring up the market profile, we keep on vacuuming through this area. We vacuumed there, then we vacuumed here, and now we vacuumed yesterday. So we haven't actually had any time value developed over here. So for me, maybe at the end of the week, but perhaps next week, if we do hold the 32.85, maybe we might just put some time value between the 33.78 and the 32.85 as per market profile. So really, because we've always never traded in this area, there's just always vacuuming. So that's my hypothesis trading into next week. We start trading and holding below 32.85, well then we'll start challenging these lows, and then start challenging those lows. You start challenging all the people who've been long the ECB, the Draghi, the so-called Draghi put, and you'd effectively have is, I feel below this level will be many stops below the 32.34, because this is all Draghi positioning over here. So 32.34, then I expect a bunch of stops below that. But for me, hypothesis really rests between this area. Don't really have, so let's just quickly look at the S&P 500. A couple of weeks ago, we spoke about this key level towards the upside, the 2,111, and we actually said, because the market had gone in one motion, that I expect the market was in this new value zone that had held since February to August, before we had that Black Monday. So we're trading this range between the 2034 area to the 2134. So in this value area, and when we cracked above it, we were speaking about that the market could come and just retest the low bounds of this value. We actually sneaked below, but we snapped back straight above it. Again, I think that was the bombings, the Paris bombings, the unfortunate event there. But now we are trading between the 2034 and the 2134. So just keep a close eye. We do some more sideways action, and we build some good value structure over here. You can still maintain a very bullish outcome for breach of this 2134 area. For me, I'm still holding on a very daily time frame perspective, holding a bullish slant, provided we hold above this 2000 swing low over here. But for the minute, we're just trading in this range, and we've literally been all year. We traded just outside this range for about 2 months, and now we're back in this range, and we've been trading since February of this year. So that is the S&P 500. Okay guys. Hope you've all learned a lot of lessons from yesterday, a lot of lessons on how sometimes not to trust the news and how you've got to manage your size when the liquidity conditions are really thin. I can't reiterate the importance of managing yourself and keeping your head and not panicking when the markets are moving and gyrating at volatility speeds that are faster than a Formula One car around around the Foster's circuit. So critically important. But good luck for this afternoon for the non-farm payrolls, and remember to always manage your money, manage your risk all the time until a setup really favors the risk reward, and then you put your foot on the accelerator and act with conviction. This is Alex Haywood from Futex Live.